Ladies and gentlemen, good day and welcome to Sutlej Textiles and Industries Limited Q2 and H1FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. This call may contain some of the forward-looking statements, which are completely based upon our beliefs, opinions, and expectations as of today. These statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. The company also undertakes no obligation to update any forward-looking statement to reflect developments that occur after the statement is made. I now hand the conference over to Mr. Rajiv, Whole-Time Director and CFO. Thank you, and over to you, sir.
Good morning everyone, and welcome to the earning conference call for Sutlej Textiles and Industries for the quarter and half year ended September 30, 2024. I trust you are all doing well. With me on the call today is Mr. S.K. Khandelia, Advisor to Executive Chairman, and Stellar IR Advisors, our investor relationship team. We have already uploaded the investor presentation, and I hope everyone has had an opportunity to go through the same. Let me start the call by giving you some financial highlights of the quarter, after which Khandelia ji will give the business highlights. While the textile industry continues to be a bellwether of the Indian economy, providing employment and generating crucial foreign exchange, the past few quarters have seen a lot of volatility, both in terms of prices of yarn as well as demand of yarn and home textiles. A combination of geopolitical events ranging from two major conflicts, delays in supply chain and inflationary pressures in major demand centers had a dampening effect on the sector. On the domestic side, we have not seen a major upside despite the festive season. We are hopeful that the next year will be better for the industry and that the improvement should start showing towards the end of this fiscal. Our spinning capacity used in Q2 was 97% against 93% in the previous period. For H1FY25, our consolidated total income came in at 1,354 crores. Gross profit improved by 13% to 586 crores, and EBITDA came in at 41 crore for a loss of 25 crores in the same period last year, which is H1FY24. For Q2FY25, our consolidated total income came in at 690 crores. Gross margin was at 43%, which was higher by 11% on a year-on-year basis. We continue to work on cost optimization and strengthening the balance sheet. We have consistently maintained our debt-equity ratio below 1. Presently, it is at 0.86. EBITDA has improved to 16 crore from a minus 30 crore or a loss of 30 crore. PAT on the same quarter last year. PAT margins for quarter saw an improvement of 397 bps, respectively on a year-on-year basis. Those were my opening remarks. I will now request Khandelia ji to provide you the business update.
Thank you, Rajiv, and thank you all for joining us on this conference call today. The current outlook for the global economy is marked by several conflicts that have the potential to disrupt global trade and also have a dampening impact on local economies of traditional textile markets. The revival of demand in the European Union, UK, and US has been slower than anticipated, and the domestic market continues to be cautious with subdued demand despite a good monsoon, improved rural incomes, and festive season. Domestically, the consumer behavior around clothing and garment purchases is shifting from a use and dispose mindset to one focused on longevity driven by growing awareness of sustainability. This shift has decreased the frequency of apparel purchases. Apparel and garment purchases are now considered discretionary, often taking a back seat to high-demand items like the latest electronic devices, vehicles, traveling, hospitality, and restaurants and other consumer products. This preference in shift has led to reduced demand in textile sector as spending priorities have moved away from clothing. At Sutlej, our strategic investments in fungible capacity and our capability to produce different types of spun yarn from any fiber or blends thereof in any form for any end use have helped us weather some of the headwinds in the sector. We are following the emerging trends and developing new value-added yarns for apparel and non-apparel use to stay ahead of the curve. So continuing to focus on optimizing our costs and improving efficiencies further. We are constantly in touch with our distribution network and are confident that our strong balance sheet, comfortable leverage, and customer-centric approach will hold us in good stead. Looking ahead, we are optimistic about the long-term prospects of the Indian textile industry and see significant growth potential. Our commitment to enhancing shareholders' value remains steadfast, and we are well positioned to capitalize on new growth opportunities while navigating current challenges. With that, we can now take your questions, please. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Agarwal from Leeway Investments. Please go ahead.
Good morning. Hello. Hello.
Yes, please. Good morning, guys. Go ahead.
Sir, my question is regarding our employee cost compared to the turnover is around 15%. And it has been like this for last 3-4 years. I've seen that. Whereas all other textile companies or just young companies have their employee cost 10% of their turnover. So that makes our company very inefficiently compared to them. So during the bad times, we have bigger losses, and during good times, we have lesser profits. So can the management throw some light on this particular thing? Because this is we have 15%, whereas these companies are having employee cost 10% of the turnover.
Thank you. You are very much right that our employees' costs are very high as compared to the exactly may not be the same spinners, but still it is high, even if the dyed yarn spinners if you take. Because in dyed yarn spinning, the employees' cost is always high as compared to grey yarn spinning, because level of automation cannot be that high, number one. Secondly, definitely our cost is high and we are working on that, and we are trying to rationalize our workforce. And the main problem which has been in last 2-3 years, because of the bad market conditions, the specialty yarns where we used to operate mainly and which used to give us higher revenue has not been there. And due to that, we are basically manufacturing most of the things. We have to manufacture many times commodity yarn, and even we have to manufacture grey yarn, whereas our entire setup is for the dyed yarns. But nevertheless, we are working on it continuously, and our people are on the job, and hopefully going forward you will see the definite reduction in our employees' cost as compared to revenue. Other part of the story is that we are trying to improve our revenue also. That in the past you have seen that our some of the capacities were not fully utilized, but now we are fully operating, and that will also add to our revenue. So in terms of revenue, that percentage will be another thing which will reduce our employees' cost compared to the revenue. So definitely your point is valid, and we are working on that. Thank you.
Should you expect the changes in next 1 year, or it will take more than that?
No. In 1 year, you will definitely see the changes. In 1 year, you will definitely see the significant changes.
Sir, you said because we are into dyed yarn, and the market right now is very bad compared to the other yarns. So is this a permanent change in the trend, or is it just a short-term phenomena? What do you think?
I think though it is a short-term phenomenon, but we are working on changing our product mix also to the more profitable, more value-added yarns, and based on the emerging trends, which I have mentioned in my opening remark, that we are trying to divert some of the capacities to different types of yarn, new types of yarn, and that will add value to our revenues as well as to our profits, and will reduce our employees' cost. Similarly, we are also working on various technologies that will reduce the employees' cost, new type of technology. We are working on that. So definitely in next 1 year, you will see the improvement, and going forward, it will be a continuous process, and we will be back, and hopefully we are trying to be better than the industry norms for the particular type of yarns.
So should we expect the change in modernization of the plant, or is it because that you'll be laying off some people?
No. You see, our plants are fully modernized. That way, we are looking for some sort of wherever the automation is further possible. Secondly, we are making the use of artificial intelligence, Industry 4.0, and such type of new technologies where the processes can be automated to some extent, and that some people, you see, in textile, a lot of turnover is happening, whether it is the workers, whether it is the staff. So we need not to lay off anybody. Automatically, the size is coming down.
Okay. And my second question and last question is regarding PET project. Sir, we spent 200 crores on the PET project in last 5 years back or 4 years back.
Yes.
Sir, I haven't found improvement in margin just because of that project. So, is there any utility of the project, and how much turnover it generates internally?
You see, so far this PET project is concerned, it was basically put up for the captive use because we have to maintain the quality of our ultimate product, that is the yarn. That was the basic purpose, and it is basically the cost which gets neutralized, not much. But of course, what is happening now, because of the use of PET bottle is increasing in sustainability and other issues, so there is a inverse ratio in PET bottle in the fiber prices, which we can get from the outside also. So now we are working on making it more branded type of fiber, and where we can get more value for our fiber, and it is not necessary that we will use our fiber for our use only. We will sell it in the market also by brand, but we are working on that because the traceability has to be there, and it has to be called green fiber worldwide, and then we have to add with the value partners, so that ultimately when the garment goes, they can say it is the Sutlej green fiber which is there, and they can trace it. So we are working on that. So that will improve our profitability of this division.
So this is a recycling unit, sir. Can you throw some light how many textile companies have this recycling unit in-house, except us?
These are not easy initiatives. I think Reliance Gold, you must have heard the name. Reliance also has the recycled fiber, which they call Reliance Gold, and they have those type of blockchain technology and other things. We are working on that. And you see, and that may take some time, but we are on that line, that how to improve make it more specialized fiber. So we are working on that.
And could you throw some light on the fiber we are on the textiles we are selling in the market, fiber, like?
No, fiber. You see, the fiber can be sold in domestic market as well in export market. We have already started selling some quantity, 500, 600 tons per month in the market, but these are the normal type of fibers, where we are making some value added, especially to some of the fibers like dyed fiber, dyed fibers, which we are also using and selling in the market also. But our ultimate goal is to make it a branded, sustainable fiber like Reliance Gold.
Like Reliance Gold, or something like decor, right?
Yeah, that will add much value to this. But that's a long process, but we are working on that.
Are we planning to open our own stores in the future, like 2 or 3 years down the line?
No, we don't have any idea, but you see that we will have a value chain partners up to garment level, and they will be using this fiber, and we will be doing that.
Okay, thank you. That's it from my side.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Kiran D from Table Tree Capital. Please go ahead.
Thank you so much. Sir, just wanted to understand from a strategic perspective. In our presentation, we basically say, look, yarn is going through difficulty. Even the coming few months, there is going to be difficulty. We are hearing opposite commentaries on the garment players. They're basically saying, look, we have inventory channel is done. We are seeing a lot of demand and so on and so forth. So if you could just tell us, how does this work, right? I mean, if garment players are probably trying to do well over the next few quarters, shouldn't yarn also do well? I mean, how do you see this?
Yes, of course. Ultimate is the garment. You see, ultimately what the consumer is buying is the garment. So if the garment does well, definitely yarn is bound to do well.
Got it. I mean, I was just disconnected between the commentary that we had on the presentation. So saying there is no good outlook as well for the coming few months. So that's why I wanted to get your thoughts of why you think so.
You see, there was commentary because that is more basically the visibility which we have right now. But personally, I am of the opinion that with the changes which has taken place in the world, say US presidential election or anything, and I hope that the ongoing conflicts should get down to some extent. And naturally, China is also improving that way. So world economy should improve. And all these things will add to the demand, because ultimately inflation has also to come down everywhere, whether it is in India and USA. In USA, something has come down. Interest rates are coming down there. In India also, it will start coming down. People have more of disposable income. Once they have it, the demand will emerge. Ultimately, there is a cycle. So ultimately, I think it has to improve.
Got it, sir. Sir, any positive impact from the Bangladesh crisis for yarn players and specifically for Sutlej kind of players who are both in man-made yarn as well as the polyester yarn?
So far we are concerned, we are a major exporter of specialty melange yarn to Bangladesh. So that way during this quarter we were impacted, and the current quarter also we are very cautious to whom to sell, where to sell, and how much to sell. And we have to manage our risk also. So that way that has impacted us in second quarter as well as in current quarter. Some impact is there. And on the other hand, in India, the problem is that most of the garment manufacturers are having small capacities, whereas the global retailers want the bigger capacities. But still, 9-10% orders has increased with the domestic garmenters in recent months, and that way we are supplying to them also. To that extent, it is a plus point. But the major impact has come from the Bangladesh. But that is all factories are running, payments are coming, sale is happening. So because their major foreign exchange earning is only from the garment. So ultimately things will further improve there, and it should be the normal.
Got it, sir. So one last question then, from a man-made, the cotton yarn and so on and so forth, not the polyester yarn, but the cotton yarn. Seemingly there's a massive cotton crop this year. Do you see yarn prices falling further because our prices are intricately linked to cotton prices? Because of the bumper crop in cotton this year, right from April onward, do you see yarn prices falling further?
So basically, it is because of the less demand of the yarn and ultimate products. Cotton crop is almost likely to be at the same level this year also. Last year also, the cotton crop in domestic as well as international market was sufficient to take care of the requirement. But actually worldwide, the demand of yarn and related products of cotton and cotton blended, whatever it is, were less. And still the demand has not yet picked up that way. So even in the current, despite the season being, the fiber rates are not improving. So until unless demand improves of the yarn and downstream products, the cotton prices are likely to stay range bound.
Got it. Got it. Thank you so much. I'll join back in the queue.
Thank you. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Ankit Shah from KS Investments. Please go ahead. Mr. Ankit, your line has been unmuted. Please go ahead with your question.
Hello, am I audible?
Yes, sir, you are.
Yeah.
Yes, yeah. Thank you for the opportunity, sir. And thank you for the explanation on the yarn pricing. So, and I have few other questions related to margin. So, what do you anticipate as the new normal margin range going ahead?
You see, it's a normal margin rate used to be 13-14% in the yarn, but this was the earlier. In recent times, should be around 11-12 to 15%, but depends upon the types of yarn. We are working that we should have a specialized yarn portfolio where we can have the higher EBITDA, and still there will be some commodity yarns where will be the EBITDA level will be less. So I think the EBITDA level should be not less than 12% going forward. That should be the minimum requirement which we should have.
Okay. So 12% will have...
In the past, we used to have 14%, 13% EBITDA. You must have seen that.
Right. Okay. And so, any growth projection on the bottom line as well?
Yes, of course. You see, whatever value-added yarns we will manufacture will add to the bottom line also. No? Our main focus is on both top line as well as bottom line. Bottom line becomes more important for generating funds for growth and other things, and we always keep very tight control on finances. So, of course, our bottom line will improve going forward. Definitely, I am hope that, because we are working on so many value-added products.
Right. My reason behind asking was that we are maintaining our debt-to-equity ratio below 1. Finance cost won't increase further, right?
No. You see, we should not over-leverage. You see, had we over-leveraged earlier, had we put up some capacities, and the type of the things which we have witnessed, it has eroded our position. But definitely not only because of any bad market situation. Normally we have been making investment in bad market situation, but visibility used to be there.
Right.
You see, bad market condition is the right time to make investment, but the visibility has to be there. Then the things are changing worldwide. What sort of technology, what sort of products, and what sort of things we should fit in our overall scenario of the products and other things, and market capability and all those types of. We are evaluating all this with a great detail, but we are always open to make investment. That is not the. Of course, we will manage our finances within the limits. We will not over leverage, but if required and visibility is there, we can do to some extent.
Okay.
There can be many resources. The resources are not the issue.
Right. Okay, understood. And also, I wanted to ask on a brand called Nestara. So, how has been the market presence like in the last quarter?
Yes.
Has it increased or how is it?
You see, so far we have launched 36 collections, and this year 12 collections are being launched. Normally 60 collections should be in the market, which takes about 5 years' time. But we are seeing traction in our Nestara. Recently, we have kept some retail, strengthen our retail team also, and we have added some some good retailers also. So month after month, our Nestara sales is improving, but not to that extent which we thought will do. It has to do something with the market conditions also, because spending by the people is not coming to the level which we expected. But definitely, I am hopeful that Nestara will be a brand to reckon with going forward.
Okay. My last question on our capacity utilization. So, how much is the utilization currently?
Currently, it is 100%, and last quarter average was 97%, and before that quarter it was 93%. I hope we will continue to run the 100% capacity as we used to do earlier.
Okay. Thank you so much, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Viraj Mehta from Enigma. Please go ahead.
Yeah, sir. Sir, we did significant capex over 2022 and 23, and even 23 and 24. A part of it was maintenance, but with the added capacity, what is the peak revenue? Right now you're saying 93%. So is it fair to assume that there is not much room to grow from here?
You see, we have to see the profitable growth, not only the top line growth. We have to see the bottom line. Our present capacity utilization is 100%. Last quarter it was 97%. And previous quarter, say Q1/25, it was 93%. You see, last year before that, because of bad market conditions, we had accumulated stock. That's why we reduced unnecessarily. So normally we have never stocked spindles, but in some spindles were stocked earlier. Now we are running 100%, number one. Second thing, we are basically in the value-added segments, which has not been doing well. And we don't want to go in commodity at this point of time because we want to remain different from the hub. So we are looking for different things. Maybe some value-added yarn, different technology, different end products. We are looking to that. So we will add capacities, but not necessarily in spindles. It may be in spindles, it may be in air-jet spinning, it may be in open-end spinning, it may be something specialty, or maybe something else, or maybe something downstream, maybe knitting or something like that. We already have some portion, trial knitting machines, we may add that. So these options are open and we are examining all these options. As soon as the little visibility is there, we will start again investing in the building capacities.
No, I understand, sir. But what I'm trying to say is, in spite of saying, and again, I don't understand yarn business as intricately as you do, and you run the business. Now, all I'm trying to understand is, from an outsider's perspective, you say we are in niche yarns, but I don't understand what is niche, because we make less money over a cycle, not in 1 year, but over a cycle we make less money than most of the peers of our size. So how is it niche? What is so specialized? Because we don't even generate, forget 12% return on capital, but we don't even generate return on debt over a cycle. So how is this business making sense to the management to keep putting more and more money in the business?
You are very much right. You see, last 2 years have been very, very abnormal. And you see, if the history of the textiles, or say 10 years down the line and 10 years ahead of the line, you see, specialty will always be in play. And we are looking to the emerging trends, and we are changing in specialty also. Say, like I tell you, say melange yarn, which everybody cannot manipulate. We have to see that the entry variant. Grey yarn, if I increase the capacity, it is not going to help me. Second thing, everybody has its own strength and weaknesses. Say somebody who is in the downstream, say he is already in the fabrics, he can add the capacity in the fabrics. If I will start adding the capacity in the fabric at this point of time when the visibility is not there, that may backfire me. Say, we have been looking to the sportswear segment. That is a new type of segments we are looking for.
I'm not saying that you add capacity, sir. Sorry to hog on this a little bit, but if you look at last 4 years, we have done a capex of 500 crores. And we have not generated cumulative that kind of profits for our cumulative profits of our last 10 years is that much. So what I'm unable to understand is, how do we derive any confidence to keep doing capex and keep doing this business where over a 10-year cycle we are not able to generate even return on debt investment kind of return?
No, I explain you. You see, in 2016, demonetization came in. In 2017, GST came in. You see, most of the business earlier used to be in the decentralized sector. So that was the point, and when the export incentives were reduced because of the introduction of the GST. So that has been the time. Then the pandemic came in. And then after the 1 year, if you will see, there has been a huge profit to us and the huge bottom line and top line. Not only us, many people in the industry have done that because the post-pandemic demand was there. And there has been huge stocking by the retailers. So that backfired that stocking. They have been de-stocking. So because the 5 years time, if you say the 10 years, it is not correct. If you will go beyond 5 years, so we are fully aware of what you are saying. You are 100% correct, and we are hopeful, and we have the market research, market feedback. We have exports, we have domestic, we have apparel, we have non-apparel use. So all sectors, and we have so much different type of capacity. So every sector never used to do bad like this. And since our expenses are high, because in dyed yarn expenses are high, as I explained to one of the questions. So because of that, there has been unusual situation, and that is not likely to continue forever. And whatever changes are required to make, ultimately we need to earn profit to the sizable numbers, at 12%, 13% EBITDA, like we should sustain our business. So we are very cautious about that, and we are working on that. And your point is very valid, and we are very aware about that and working on that.
Okay, sir. Thank you, and best of luck.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Jishnu Srivastav from SSB Digital. Please go ahead.
Thank you so much for the opportunity to participate in this call, sir, and for the transparency you provided around the company's performance. I have 2 questions. The first one is, does the company have any thought process on exploring into newer geographies? And the other one is, how do you see the domestic textile market evolving with rising disposable income and shifting consumer preferences?
So first, let me take the global opportunities which you are saying, geographies. You see, we have been continuously evolving different markets. Textile industry is such an industry which has been moving from one country to other country. Initially, if you say it started from Japan to Thailand, Thailand to Indonesia, Indonesia to India, and then to other countries, now it is moving to African countries. So for ultimate end product is the garment and such type of things. So that way, since we are in the yarn business, our yarn geography also keeps on changing. Then we have added non-apparel products. Their geographies are developed countries, like say the automotive textiles. Then there are different type of textiles which we non-apparel, and industrial use textiles. In that we are moving gradually, and that keeps on changing the geography. So that's a continuous feature and continuously evolving, and we continue to monitor, and we have a large export team, and 1/3 of our material is being exported. In case of domestic also, there are changes. Change is the way of life, and what is dynamic. So in India also, we are noticing that people now want comfort type of fabric, majority of them. Of course, disposable income and preference for discretionary spending are there, because clothes is not that important now. That is not that in the marriages earlier people used to wear suits. Now everybody wears ethnic, which makes of the filament. And so changes keep on happening. It is not today. It has been happening all the times, if you will see. So changes will continue, and we are making ourselves, our processes, our marketing, our centers, our end users keep on changing as per the emerging market trends that we are doing. So we are moving more towards non-apparel, not only for the apparel. In apparel, say we are adding the comforts. So that is comfort is everyone wants that there should be lycra. Earlier there used to be 2% lycra. Now they want more lycra. They want 4 sides of lycra. So those type of changes are taking place in the consumer behavior, consumer preferences, and we keep on studying them and keep ourselves preparing for that. So that's why I mentioned in my opening remark that we are continuously following the emerging trends, and we are preparing ourselves and making changes in our product mix as well as in our technologies to suit the emerging trends, so that we remain ahead of the curve. So that we are doing.
Okay, sir. Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you, everyone. and very interesting questions were there, and we have tried to explain to the best of our capabilities and experience. In concluding remark, I would simply like to say, though the challenges in spinning industry are continuing, but we are hopeful that in next year market conditions will be better than current year, and with the efforts which we are making, we should see the very positive results in next year. This is what I would like to communicate. Thank you.
Thank you. On behalf of Sutlej Textiles and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.